So when you're thinking about a foreign employer-funded pension, there are some things you have to think about. The first one being that whenever your employer puts into your pension account, that's money they're giving you.
Free money. It's Vanessa from Wander Onwards, your favorite Mexican American in Germany. Today I have a very special guest, my friend Nathalie from My Expat Taxes. Nathalie, thanks so much for being on the show.
Of course, and I have to say now I'm your favorite Vietnamese American.
Amazing
person. Yes, both from California.
Yeah.
Anyways, I'm here to help you figure out with your foreign pensions, kind of what pitfalls there are when it comes to US tax reporting, because there's always something. How to report pensions, and it's actually a little bit more complicated because it's not just about the income you make, but the money you put in might also need to be reported. I won't give away more. You gotta keep watching that video.
It's daylight robbery. But I think what's particularly cool is that we're both women of color living abroad, and no one has really taught us about how to do this. It took Nathalie creating a whole company and getting her CPA license, right?
Enrolled agent. Which is the same essentially as a CPA. I'm sure CPAs will not agree, but enrolled agent, just for educational purposes, is essentially a certification specifically from the IRS, and it's the only certification that's 100% focused on US taxes.
Okay, great. Well, we have this incredible enrolled agent that is going to walk us through what pensions are like abroad, how you report them back at home, and what are your options when you're thinking about long-term wealth generation. Stay tuned to find out more. We're gonna make this interactive. We're gonna give actual examples, and I'm gonna show everyone that pensions are not boring. They're very sexy.
Yeah, they are.
You don't sound convinced.
I am convinced because at the end, it's money when you retire, and hopefully you're retiring earlier. The only thing with pensions is they assume you retire at like end of 60, which is not when we retire. But hey, some additional income streams that come after 65.
Exactly. And if you're interested in learning more about wealth generation and building and protection, we will actually be running a workshop about wealth generation as an expat abroad soon this year. So drop a follow, drop a subscribe, hit that bell so you get a notification every time a video is posted, and we will get started. So let's start with the most fun topic of the day, which is of course pensions. So we have two that we specifically want to talk about, and let's start with the employer-funded pension. As an example, my company in Germany allows me to contribute part of my pre-tax income to my employer pension, and they add a little razzle-dazzle on the top. So as our expert, Nathalie, what details are involved with the employer-funded pension?
I like first off how you call pensions fun. That's a nice word to say. Anyways, let's go into employer-funded pensions are really good kind of tools to plan for retirement, and from a tax perspective, from a US tax perspective, it's pretty good. So when you're thinking about a foreign employer-funded pension, there are some things you have to think about. The first one being that whenever your employer puts into your pension account, that's money they're giving you.
Free money.
Yeah. You might not be getting that money directly in your bank account today, but they are putting money into your pension account so that you can get that money later on. So they are contributing to your pension, aka they're giving you compensation, aka it is taxable because it's compensation. So key thing to realize there is that when your employer contributes to your pension, you may actually have to report those contributions as taxable in the year contributed. I know that's totally against the whole point because it's pre-tax in your local country, but you know, the US does not care about your local country too much. There's about 5 countries where they say, all right, I'll play by the rules. So Germany is fortunately one of those where you can exclude employers' pension contributions in your compensation for the year, so you can defer it. Austria, where I live, is not one of those countries. So it's very country specific, but it's not a big deal, right? So what you just need to watch out for is you have your salary, and if you're in a country where there's not a tax treaty allowing you to defer employer contributions into your pension, make sure you also report it as wages. Obviously, I can get more into the details about if you can exclude that or not, but for the sake of this video, I will not. So they are a great tool. Just watch out to see if the contributions to that pension are taxable in the year contributed. Now we're just talking about the contributions. We always talk about the distributions as well. I don't know if you want to add anything there about distributions.
I just love talking about all of this because no one told me anything about this when I first moved abroad. And finally, I have an expert that is my best internet friend. So I really appreciate everything that you've been helping me with. Confused about what to do with your money abroad? Well, I can help with that. My financial fluency course will give you the perfect overview of how taxes work, budgeting methods, investing options, and so much more. Check the description for details. Of course, if you are liking this video, drop a subscribe, hit that bell to receive a notification when videos are posted because I release videos every single week. So back on distributions, for us that don't have a finance degree, what's a distribution?
So distribution is essentially income that actually gets distributed to you, hence distributed to you, distributions. I know it all kind of makes sense when you think about it like that. So when you contribute into a pension, to be honest, in that moment, you're kind of like, I don't even see the money. It doesn't even exist. It does exist. It's in an account. Hopefully it's growing, right? Because it's invested and etc. and you're getting some really good returns, etc. But when you take the money out, normally at retirement age, or if you leave the employer, that's also another instance you can take out money. When you take out that money, when it's distributed to you, that is income you receive, AKA taxable because you receive income. So when you get distributions, make sure that you report it as distributions, as pension income. Now you're probably thinking, oh my gosh, the US is gonna tax me on that. It depends, right? Again, it's pretty hard to get double tax if you know what you're doing. I know that's a bold statement in itself, but that's why My Expat Taxes exists. Ding ding! But essentially, when you get that income out, ideally, you're taxed in your local country. So Vanessa, you pull out your pension distributions. Germany's probably gonna get a piece of that pie, right? They'll probably tax some of it because again, you put in pre-tax contributions, which means it was not taxed yet, which means it will be taxed when it comes out because there's always tax one way or another. So when you pull it out and it's taxed, you can claim whatever income tax you pay in Germany or your foreign country as foreign tax credit. So the US doesn't necessarily also get a piece of that pie unless you pay really low income tax rates on the distribution itself, then the US would obviously want their piece. But, you know, again, to kind of summarize it all up, contributions go in. They may or may not be taxable depending on the country you live in. Again, 99% of the time it's taxable. Now, when the income comes out, it is taxable. And now you're thinking, wait, how? I'm being double taxed. I'm being taxed on contributions coming in and then distributions coming out. Not necessarily. If you are reporting your contributions as they go in, and that is taxed in the year contributed, make sure you record that as your cost basis because the IRS will only tax you on anything extra from your cost basis. So essentially, it's a little bit of a complex calculation in the end.
Which we won't go into because that's why My Expat Taxes exists.
Exactly. So essentially, when you pull out the money, just make sure that you know what your cost base is, you know what you've already been taxed on in terms of contributions, and anything outside of the contributions you were already taxed on that comes out as a distribution, yes, that may be taxable in the US, but ideally it's already taxed in your local country. You just claim that foreign tax credit and you're good to go.
Now, if your eyes have glazed over, that is okay. I've been dealing with this for the last 6 years. I've been making actual money instead of being like a broke college student. It is something that we're here to help with. That's why this technology exists. So you don't really have to go into the details of what needs to be reported when. Instead, My Expat Taxes brings that information to the front, asks you for a few numbers, and then you have that in your records. Is that right?
That is correct. So we just ask you, do you have a pension? Is it company funded? Tick, tick, tick. All right, contributions are taxable or contributions are not taxable. Tick, tick, tick. Okay, distributions are taxable, distributions are not taxable. That is how it should be because I don't think if you watch this YouTube video, you'll remember what I just said.
Which is totally fine. You are not a tax expert, which is why we have one here. All right, let's talk about the employer-funded pension because I have two, one in the UK and one in Germany. Now, if you're new to the employer-funded pension lifestyle that I live, obviously, it's important to make two decisions. First, you need to opt into this program. Like, it's not guaranteed that you are part of it. So they're gonna ask you through your HR, or they might offer it to you when you first sign on to the company, and you'll need to opt in. The second thing is you actually need to choose what you're investing your money in. Typically, you'll have an option of 2 to 3 funds. They're organized by risk level, so low, medium, high. I'm a risky girl, so I always go for the high one. The reason being is they're typically S&P 500 trackers of some sort. If you don't know what that means, I'll make another video about this. And you wanna choose the fund that most aligns with your expectations and like taste for risk. So if you're a non-risky person, maybe the low risk fund would be a better option that typically tends to have a lot of corporate bonds, country bonds. And then another great one is a target date fund, which basically means Vanessa is going to retire at 67 because that's the legal age in Germany. We know she's not because she's chasing early retirement. But as they invest my money in the high risk account, they'll start to turn that into cash, bonds, and other more safe securities as I approach retirement age. So that's how you handle an employment pension fund.
I love all the choices you have. That is not always the case in certain countries.
No me digas, what?
Yes, so it's amazing about the choices she has. When I first signed up and worked abroad, not for obviously My Expat Taxes, but when I first was working a corporate job, I also climbed that corporate ladder until I got off the ladder. Essentially, I was not really given any choices. I was just told they're gonna deduct part of my pay and put it into a pension, and that's it. So if you have no clue what she's talking about, you might be in a country where that's it.
That's all you can do.
That's all you can do, but at least your money is being invested. And to be fair, in Austria, a lot of people do live off their pension, so it is doable.
Actually, in China, they also do this, where they just take your money and don't tell you where it's going. And when you leave the country, if you've been there for fewer than 5 years or something, fact check me on that one, you can actually claim that money back and take it home. And so my client has a 10,000 pound paycheck coming her way from the Chinese government. So we love a rich queen.
Gotta report that on your US tax return.
This is daylight robbery. Really?
I mean, yeah, of course, it's income. Income is always reportable on a US tax return. I don't know how many times I gotta say that. There is no source of income that you do not report on your US tax return, except for stimulus payments. You don't have to report stimulus payments on your US tax return, so just heads up on that. However, any other type of income, it goes on your US tax return. But if your client, say, used the foreign income exclusion, she excluded all of her salary, so she has no, she's essentially no taxable compensation, and then she reports that 10K, pension distribution, might still be tax-free because it's under the standard deduction. You never know. There's so many ways to optimize your US tax return. My Expat Taxes will help you do that.
So she's British, so.
Oh, okay. Nothing on your US tax return. Scratch that. But if she were American, US tax return.
Okay, well, I'm glad I found this out because I have definitely been in that position. Moving swiftly on, let's talk about a IRA that you can open in the United States while you're abroad. So for those of us who did not study finance and had no adult to tell them what that is, what's an IRA?
First off, you say IRA, I say IRA.
IRA.
I say IRA, she says IRA, potato, whatever.
Same.
Individual retirement account, AKA IRA. So
learning English.
So these are really tax favorable accounts in the US, retirement accounts in the US. They are vehicles to help you save for retirement. We have a whole video on this, so I'm not gonna get into all the details. Check out My Expat Taxes for that video. Essentially, there's a traditional and there's a Roth IRA. There's plenty more, but let's stick with the common ones, traditional and Roth. Traditional is pre-tax contributions go in, Roth is post-tax contributions go in. They are two amazing tools that you can use as an expat abroad. assuming that you're eligible to contribute, but I don't think that's in the scope of this video right now.
No, it's not. But at least you know that these are potentially options for you that your country of residence may or may not recognize. Unfortunately, we can't do 100 and how many countries are there now?
There's a lot.
There's a lot. And actually, that's a very political statement. I do apologize. It's impossible to figure out every single country as a group. So figure out where you are and how that relates to America. Figure out if there's a tax treaty and then start there. When we're thinking about retirement, we've just gone over about employer-funded pensions, but there's a second option that you can choose as an American abroad, which is a private pension. Now, the rules around private pensions vary, and you have to elect and go find one yourself. But let's talk about the important nuances of a private pension as it relates to tax.
One of the main things is a private pension can fall into foreign trust reporting, which is why I do typically stay away from that. What I mean here, because I'm sure that makes no sense to you, whatever, is the US likes to think of pension plans as trust, foreign trust. And once you hit a foreign trust, you have to have these really complex forms. There's different deadlines for them, yada, yada, yada. The main thing is the penalties are high on these forms. 10K per form, you need 2 of these forms, that's 20K potential penalty. And I have seen the IRS send people letters of 20K penalties. I'm not trying to scare you because 99% of the time you can get out of it because everyone knows it's excessive. However, you just don't want to be there. So regardless, if you're thinking about a private pension, it can be good because we do have this amazing new revenue procedure. Revenue procedure 2017 means nothing to you, means the world to me.
Sounds sexy.
It's good. It's good because if it really is for retirement, if there are limitations on the contributions you can put in, if the investment income really is deferred and you tick a couple more boxes, you may not have the whole foreign trust reporting. And if you don't have that, then it makes it a lot more of an attractive offer. However, if you do fall in the foreign trust reporting, the private pension, honestly, it might cost more to report everything than even have the earnings from the private pension on the US side. So I just warn about that. I'm not saying it's not a great option. Just make sure you don't fall into this whole foreign trust thing. It's not that it's so overly complex, it's just expensive and unnecessary to file these forms, right? That's just the plain truth of it. So what I would recommend is My Expat Taxes. If you have a pension, we have all the conditions listed. You can just see if your private pension would fall into that category or not before you make the investment. The main thing is to plan ahead and not just throw your money into different buckets and then, not really know what happens because unfortunately at the end you have 2 tax requirements, your local country and the US. And the US does not like it when your money is in a different country and not in the US.
Yeah, it seems almost like a untrustworthy partner is like following you around the world. So in Germany, I have a wealth manager and there are 2 options that she's put forward for me as an American specifically. Something called a RUA, which is really hard to pronounce, and then a private pension as well. So because it is through a proxy, I'm able to get around some of these bigger filing requirements. I've actually chosen to divert completely and go for a taxable brokerage in the United States. Would you recommend that people do that instead of a private pension abroad?
Well, I never really want to recommend because it all depends on your unique situation.
This is not tax advice.
Yes. Yeah. I also have a taxable brokerage back in the US, essentially because the private pension can be tough. Again, anything when you're touching kind of foreign private pension investment accounts, you hit either foreign trust or even this foreign mutual fund kind of trap, which is called PFIF, P-F-I-C, really PFIF. I'm not gonna get into it, but it gets tough. And so if you're able to kind of invest in a US brokerage fund and it's not a tax nightmare in your local country, at least you know it's not a tax nightmare in the US, so that's pretty good. So I also have a taxable brokerage in the US. That's not a recommendation, that's just what I have. Seems like that's what you have.
Yeah, everything that we're discussing here is not financial advice for you as an individual. It's to give you a better idea of what people are doing abroad, what options you have, so you can make decisions for yourself about what's the best next step.
Exactly. It's about pulling back the curtain because no one talks about money, which is odd. Everyone should talk about money, especially if you're a US American abroad because it gets so much tougher. And really our job here is just to tell you these are the options and here are some warnings that you might get into, like foreign trust reporting, foreign mutual funds, PFIFs, etc. etc., etc.
Yeah, and I want to emphasize that if you are just starting your career and have like a couple thousand to your name, this might seem really daunting, but it's really not that terrifying. You just got to figure out what works well for your country the first time and then continuously repeat that process. So if you're brand new to your career, don't panic. You should really be panicking about inflation, about lots of other things, but not this, right, Natalie?
Exactly. And if you're new to your career, you probably already have an employer-funded pension. So that's already one checkbox.
Done. Well, I hope you loved hearing all about pensions, Social Security, and how to compound these different income streams to build your best, most wealthy life later on. Thank you so much for being here, Natalie. You're so like knowledgeable. I'm always in awe of you.
Okay, now you're gonna make me blush. I'm very honored to be here. And at the end of the day, the most important thing to know is that you should plan for retirement. Whether retirement is at 35, 65, or you never wanna retire, it's always important to know that there is gonna be income at some point down the road. Because honestly, around the 60, 70, I'm not trying to work.
No, ma'am, I'm gonna be tired.
I'm not trying to work. I'm not trying to work. I'm honestly not trying to work for like, okay, I'll do the hard work now, but at 65, I'm not trying to work anymore. Anyways, it's important to have the money then, so it's important for you to know how to save up your money for retirement.
Absolutely. And where can people find out more information about you and your company?
myexpattaxes.com. Go there, you'll find all the information you need. We're the one and only myexpattaxes.com. And look for us if you want to reach me, reach my amazing team that is all there to help you.
And if you want any more information about the things that we've discussed, I've linked it all down in the description for you to enjoy. And we have other videos coming out too, so stick around, hit that subscribe, like, and notification button so you can hear about future opportunities to work with us in our wealth building workshop and to find out more information about personal finance abroad. Thanks so much. Bye. Thanks for watching. If you liked that video, give it a thumbs up and subscribe to my channel to get notified about new videos every week.